Good morning, Jags. This is Fahad. Today is uh, Thursday, February 18th. Let's get started. Uh, as I normally do during the earnings season at night, I spend some time looking at some of the earnings reports that come out that day, which I did not get a chance to review. If I find the headlines exciting, then I actually pull up either the earnings transcript or just listen to the management earnings call to see if anything exciting there. And just a normal daily nightly routine. You'd be sitting on the couch watching some TV. I would have my headphones on and I'd be listening and reading a lot of things on my tablet. And so one of the stocks that I was looking at last night is Agilent Technology, symbol A. This is a very, very strong, steady grower for quite some time. This company reported earnings yesterday, and the stock sharply gapped higher, all the way to $137 per share, but then it faded a little bit, ended up finishing down at the low of the session at $130 per share with a rather pretty strong fade on high volume. And chances are that this thing is going to fade even further from here. Maybe it will come down all the way to about 120s. But when it gets there, and if it gets there, around 125 to $126 per share, I think this is presenting a fantastic buying opportunity. Now, this morning, the S&P futures are down 18 points, Russell futures down 12 points, NASDAQ down 113, and Dow down 131 points. So the weakness that we started to see spread yesterday is continuing this morning in the equity market futures. And this all started after the US producer price index shot up big time. We discussed this in the chat room yesterday, and that was precisely the risk I've been highlighting regarding inflationary trends, which was also present in the Jaguar first quarter outlook. And so rising PPI and rising CPI is a major, major risk to the market until actually this easy calm period is over, which is May. And that is starting to hammer the valuations, particularly on the tech sector. So as a result, you're seeing a lot of companies reports rather very, very good earnings report and say many positive things on the outlook, but they're seeing fading action upon earnings, and the stock's actually pulling back. So this is a time where you should be making a list. You should be observing, and you should be looking at some of these ideas that are unnecessarily going to take a break, perhaps in the next couple of weeks with this rolling market ongoing correction, and then look for where those opportunities will be in front of us, maybe within a week or 2 weeks. And Agilent should be on your watch list. This company reported a fantastic quarter of 11% organic growth, sharply beating expectations of only 4% growth. Huge, more than double the expectations on the street. In first quarter 2021, the biological manufacturing and Chinese end market drove significant amount of growth, according to the management commentary. But also the industrial and the academic and the diagnostic markets, which were previously deeply negative, have now basically inflected back to 0% growth and will potentially inflect from here to a positive territory. The company guided conservatively 6 to 8% organic growth in this fiscal year 2021, which may sound like a step down from 11% growth that they just reported. However, that's conservative guidance in my view, because they're still baking, if you look at the management commentary, they're still baking a lot of conservatism related to COVID-related shutdowns. But even if that conservative view, the midpoint of that being 7%, is significantly better than what the street had been expecting, which was only 4%. Key bank analyst was immediately out with a research note last night as well. They're calling this their favorite COVID light idea, and they're raising their price target from $130 to $148 per share. The company also mentioned that 21% of their revenues are tailored to chemical and the energy space, which they're seeing significant rebound. And they saw 200 basis points of acceleration in that particular segment from the prior quarter. That's sequentially. They also mentioned that the Chinese recovery contributed 500 basis points of sequential growth from Q3 to Q4. and the manufacturing sector produced 125 basis points of incremental growth. For the guidance, the company believed that that they should be able to see organic growth rebound along with that margins rebound to back to pre-COVID level, which was and then from there, given the cost cut measures that were announced last year precisely due to COVID, they're running a very, very lean operations right now. So the chances are, as the top line revenue growth rebound, we're going to see the margin trajectory actually exceed expectations as well, which should also support higher valuation and all of that. Put it all together, this company posted a rather very clean, very strong, and a fantastic quarter. Any kind of material pullback in this name as we go through this ongoing rolling market correction, and some of these stocks are going to reset, will present really good buying opportunities. In my view, and Agilent should be one of them. Let it come in to around 125, and I'll be out with an official trade idea recommending some sort of call structure to look for a rebound back to about $140 per share. That's it from me. Let's go to Jay.
Morning, everyone. So late yesterday in the chat room, a question came in privately asking us to take a look at a company called Esports Entertainment. Ticker for that is GMBL, so Gamble. This company has a three-prong growth strategy, which focuses on esports entertainment, esports wagering, and then iGaming, traditional sports betting. If you first take a look at the esports entertainment business, this includes your online and in-person leagues and tournaments for gamers. And as I went through some recent notes, I think one of the things that stands out is that they have done numerous, acquisitions and partnerships. For example, one of the most significant partnerships is with an esports brand called Dignitas, which is owned by Harris Blitzer Sports and Entertainment, or HBSE. HBSE is the owner of such properties like the Philadelphia 76ers, the New Jersey Devils, and the Prudential Center up in Newark, New Jersey. Last August, the company acquired Esports Gaming League, a UK-based tournament platform. They also partnered with a company called Allied Esports. But according to Noble Capital, in their initiation note, they said the company recently announced the most transformative acquisition of its young history, with plans to purchase Helix Esports and GG Circuit for $43 million. This acquisition is going to close in early Q2. Helix Esports has state-of-the-art esports centers that allow gamers to compete on modern high-end gaming equipment. And in addition to these facilities, the company will own GG Circuit, which is a business-to-business, cloud-based management system, tournament platform, and point-of-sale solution. And then within this acquisition, there are a couple of other companies that kind of get included, such as Genji Analytics, which is an analytics and scouting information company, but also LandDuel, which is a player versus player wagering platform. Noble believes that these platforms provide relationships that may cross-pollinate to its other business lines and attractive opportunities for growth, which now leads me into the esports wagering platform business. The company has a platform, a mobile wagering platform called VIE, and this platform provides fans the ability to wager on professional esports events. And notably, you can't bet on any casino type games. It's only for esports. Noble Capital noted that in their initiation note when they wrote it, we expect that the company will seek a two-prong approach to growing this business, including developing its esports wagering business internationally and to obtain licenses in the United States. Back on August 20th, the company entered into a multi-year partnership with Twin River Worldwide, also now known as Bally's, to launch VIE in the state of New Jersey. If we go to the company's earnings call, which happened on Tuesday, management said, we plan to launch our VIE platform in New Jersey this spring, early April. After that rollout, we explore market access for expansion into additional US states. We also look forward to working with proposed new regulatory framework in Canada as provinces there begin to offer single event sports wagering in the near future. Now there is a lot more to elaborate on, and that is my goal. I'm planning to probably do a homepage write-up on this one. I've got most of the information, but I know I can elaborate more. So just keep an eye out for that on the homepage.
Yeah, very interesting. We have definitely fielded a lot of client questions on this one in the last couple days, and the stock has been running very hard, so naturally that catches a lot of people's interest. You know, but what I'm wondering though is, and I would like to see in the article if you're going to do one on the homepage, is that this is not a new company. I mean, this thing did the IPO a long time ago. It's been around for almost a year now. And back then too, when they made the first pitch, I remember reading a lot of the history in their S1 filing last year, and they talked about how esports is going to be such a hot business, and there was a lot of positive things. And throughout since then, I've discussed many different things. But what changed is basically what I'm trying to get at. You know, what has changed that has sparked such a huge interest in the stock by the investors community in the past 1 to 2 weeks? And maybe this has to do with these new partnership deals that you're talking about that has kickstarted, or maybe finally the revenue model is coming into picture because this company came to market with zero revenues. If you look at their S1 filing, and then the pandemic happened, so all of these things were shut down. But I'm looking at their latest report for the quarter that ended on September 30th. Revenues went from zero to a little over $200,000. So finally something is there in motion. So there could be a lot of elements, but I want to know what changed in the past 2 weeks that's caused this excitement in the stock. All right. Okay, good stuff. Let's go to Chronicle.
Morning. I have a preview of the next video for JaguarMedia, and I'll preface by saying this is going to be an extremely speculative idea, where this could either do nothing for 20 months, or it could just as easily end up being a multi-bagger. So might not be everybody's cup of tea, but the overall theme behind this is twofold. Number one, it's becoming rather difficult to call the market over the near term, so I'm looking for ideas that are going to be idiosyncratic and not highly correlated to the general market. And number two, I think one thing that's going under the radar is the amount of growth that the Southeast Asian economies are going to see coming out of this recession. For example, IMF is projecting Indonesia's GDP to grow above 5% this year. Vietnam is expected to grow 7%. Malaysia is forecasted to grow 7%, and Singapore at 5%. So I think there's opportunity here, which is somewhat going ignored. And I think one of the big drivers is going to be technology and internet companies. Unlike North America, where there's plenty of lobbying, regulations, license requirements, and involved in starting up a business, the various governments in Southeast Asia are still figuring things out for the most part. And so this in turn has made it relatively easier to set up new internet businesses and tech companies. Additionally, the governments in Thailand and Indonesia have been actively encouraging tech companies to set up with subsidies and various tax programs. And I know that Malaysia tomorrow will be announcing a new multi-year plan to kickstart the country's digital transformation over the next decade. So where am I going with all this? At Jaguar, we've been incredibly bullish on Sea Limited for many quarters now, and it's been a great winner for us. However, contrary to what Wall Street believes, there's actually a lot more to Southeast Asia than just Sea Limited. And so I think it's worth keeping an eye out for other tech companies in this region that have the potential to be the next big opportunity. So the idea that I'm bringing to JaguarMedia is a pre-merger SPAC called Bridgetown Holdings. Essentially, this is a blank check that's focused on acquiring high-growing tech and financial companies within Southeast Asia. And what initially caught my attention is that they are backed by a couple of very successful billionaires. One of them is Peter Thiel, who I'm sure everybody knows. He's got two people from his investment firm sitting on the board of this SPAC. And the other promoter is Richard Lee, who is a very famous financial figure in Asia. He basically runs Pacific Century, which is a private investment group heavily focused on communications, tech companies, and fintech. You may have heard of his father, Li Ka-shing, but Richard himself is no slouch. He made extremely successful investments on his own, and rumor has it he's trying to move money out of Hong Kong amidst China's growing influence. So this SPAC has a couple of very impressive sponsors who know what they're doing. And on top of that, they are very early and ahead of the competition because as it stands, there's only one other major competitor out there who is looking for SPAC opportunities in this region, and that's SoftBank. And that's it. That's the only competition they have in this rapidly growing market. Everyone else seems to be missing out on this opportunity. Now, in terms of catalysts, Bridgetown is currently in preliminary talks to potentially merge with Tokopedia, which is the biggest e-commerce company in Indonesia with over 100 million monthly active users and almost 10 million merchants. They currently have plans to expand and take on their regional competitors and are trying to merge with Gojek to take on Sea Limited. That merger is going to result in the single biggest corporate entity in Indonesia. However, even if this particular deal does not work out, that's not the end of the world because Bridgetown still has until October of next year to solidify a partnership with many other suitable alternatives from the region in terms of the target pool. But I will say that one good sign here is that since the news came out in December that the discussion with Tokopedia is taking place, there hasn't been a sign of either party walking away, even after 2 months. Basically, the idea here is that I'm taking a calculated gamble on the company's ability to seek out high-growing companies and form a partnership before the deadline of October next year. If they're not successful, then in theory, the money we invested will be returned. So the risk here is essentially the opportunity cost of the money sitting there doing nothing if they fail to land a merger. On the other hand, if they do manage to land a deal with any major tech company in Southeast Asia, then this is the sort of position in the portfolio that could end up making our year. One more thing I should mention is that there aren't going to be warrants in this SPAC. So there's not going to be any issues with warrant dilution here, which theoretically is a positive for the common shares. So that's the core of the bull case, and we'll flesh it out more in the JaguarMedia video itself. Tentatively, it should be ready to record by early next week.
Sounds good. Looking forward to it. I was just reading as you were talking about Tokopedia. In 2009, Tokopedia's gross merchandise value (GMV) reached about $5.1 billion, and it looks like that it was expected to increase because it's all private information, right? So it rose to all the way to $15 billion during the height of the pandemic. So pretty substantial increase in growth rate, but I have to confirm that. They also mentioned that until 2 years ago, this company was valued at just $1 billion in market capitalization. So, but I'm assuming that that's not the case anymore. It's likely going to be much higher. The company, because just Alibaba invested $1.1 billion in Tokopedia in 2017. And so naturally that since then, I would assume given the pandemic led growth rate and all that stuff, the market capitalization has substantially increased since then. So it's an interesting play to come to the market, an e-commerce leader from Indonesia. Will it be as successful as Sea Limited? Will it be as successful as some of the other e-commerce like Mercado Libre or whatnot? But there's no question that this is an emerging market e-commerce leader, right? So there's a lot of growth there that's going to be captured by the underpenetration in markets such as Indonesia. So we're going to find out, and looking forward to this presentation and the write-up next week. Great stuff. All right, folks, we're going to stop over here. Thank you very much for joining. We'll see you in the chat room shortly.